Welcome to another episode of the Instant Payments Decoded with the Instant Payments Maven. I'm your host, Marcia Klingensmith, the CEO of FinTech Consulting, also known as the Instant Payments Maven. Today, we're diving deeper into the exciting world of instant payments with an industry leader. For those of you who are navigating the instant payments landscape, you know how helpful that real-world insights from other institutions that have already paved the way can be. So joining us today is Ryan McNaughton, the Vice President of Information Technology at the North American Banking Company. And you may have caught his updates on that recent FedNow March town hall. Today, we're going behind the scenes. So we'll be uncovering North America Banking company institutions' journey into instant payment success. So we're going to explore their initial vision, the challenge that they faced, and most importantly, the incredible results they're achieving. So welcome, Ryan.
Thank you for having me.
Hey, Ryan, so tell us about your institution's initial vision for instant payments. What motivated you to be an early adopter?
Well, we were lucky enough to have two things going in our favor, Marcia. The first is that we have a management here and a principal, our CEO, who's been very involved in payments in general in the payment arena for many years, former board member of NACHA. We began the journey by joining the Federal Reserve task forces on the faster payments front, and we're very excited at the prospect of being a part of the first new payment type in the U.S. In 40 years or whatever the exact number is, but something like that. And on the second front, we have a thriving payments business for one of the top 30 ACH payment originators in the country, despite being a community bank, just over right around $1.5 billion in asset size. So we punch above our weight in the payments world when it comes to that. And we had a built-in ready-made customer base that would have a lot of interest in getting as much business as they could manage moved to out of the ACH or wire or slower payment spaces into a faster payment environment. So really, that was all the motivation that we needed, was the vision. I say really, but that was all that we needed, was the vision and the motivation from an existing customer pool.
So your customers were actually asking for it, and you already had some level of senior leader buy-in from being engaged in the industry from the very early days.
Yes, very much so. Our CEO was on the Federal Reserve Faster Payments Task Force, and I was a member of the Secure Payments Task Force. It's smaller cousin, and we also have been involved in other payments organizations at the state and national level, most specifically NACHA. So we had built up through the paper remittance days and the subsequent paperless move 20-some years ago into we have a very large back-end payments business, and so our customers and our customers' customers in that space are the ones that they aren't leading us, but they're telling us what they want and what they see that their customers want, and what they see other competitors actually offering that motivates them to have a similar style of product or a similar menu of product offerings. And as either the payable through agent or the bank, the originating bank, it was up to us to satisfy the needs to keep our customers thriving.
Can you talk a little bit more about those like specific pain points that customer was facing? So you were talking about kind of like this paper-based environment, this pressure from their competitors. Can you elaborate a little bit more on their
Well,
pain and how you felt this was going to address that?
sure. The pain points in that area exist in two spaces. The customers themselves have the pain point of needing a bank that can satisfy from a purely technical standpoint, a lot of the things that would aid them in actually originating, transmitting, receiving, and accounting for various payment types across, from paper to electronic to wire to whatever you can think of. We don't do very much in the card space. We didn't start out there, but we're also moving ahead in the card space as well. And then for ourselves, the problem with a community bank is to find a way with responsible use of resources at hand to remain not relevant, but similarly competitive in terms of product offerings, including all payment types for today's topic of conversation, to say to customers, yes, we can give you the same kinds of service and offer the same kinds of resources that larger institutions have, and that would include instant payments.
And so, just to recap, what I heard is that it was really important to be able to offer them the full spectrum of payments, to be able to do the sending and the receiving, and to do this with minimal resources.
I won't say minimal. I will say responsible use of resources available to us.
I like that choice. No, thank you.
My
That
background being IT, all I do is spend money. That can be confirmed by speaking to my boss and his boss.
So did you, I mean, I guess talking about money, so did you guys have to build like a business case for your board to help with that buy-in? Was that part of your journey?
It wasn't so much a business case, simply because we were lucky enough to, as you pointed out, have the customers coming to us, and a large enough number of them ready to commit a large enough amount of business of their own to the product to make it something that didn't really need much in the way of a traditional business case. What we had to do was figure out from an internal resource standpoint where we were going to commit the funds for the various roles that need to be played in the transmission and acceptance of instant payments. And our board was willing, after we sort of surveyed our own internal resources and capabilities, to partner with a third party, a provider, in this case, because it made more sense simply from an availability standpoint, if nothing else. The big thing about instant payments is 24/7, 365, which for an institution our size is not necessarily equivalent to the staffing that we already maintain. And a service provider and a third-party network in this case can really alleviate some of those internal resource constraints that we have from an availability and from a technical maintenance standpoint as well.
So are they serving? We didn't talk about that earlier, but are they also supporting you from that operational perspective?
Not explicitly from an operational perspective. We still maintain our own full operational control over everything. Their presence is more technical. to speak a little bit more towards the 24/7, 365 concern, banks have been doing making funds available to their customers 24/7, 365 for a long time. The instant payments are not new in that regard. And anybody that's ever used a debit card at 2 in the morning on a Sunday can attest to the fact that that money money messages anyway can move at that time. And so the big concern was, well, with instant payments, how do we handle exception items or fraud checking or things that are in addition to what we're already used to with in the card world for this 24/7/365 world. And the answer, at least for us, has turned out to be by performing risk assessments, making availability not universal across all of our customer base, qualifying people, setting limits for velocity, for a dollar amount, and things that any sort of risk calculus would perform. And by sort of leveraging the tools that we already knew and that we already had and that we already used in a kind of a recombinative form, we're not worried about the fact that an instant payment might flow at 2 a.m. Sunday morning instead of a card approval,
Available. So there's a lot of levers that financial institutions can tap into to make sure that the risk exposure is in line with their risk appetite, is what I'm hearing.
Absolutely.
How about internal resistance? Was everybody like 100% on board from day one, or was there any?
No product is ever 100% across the board from day one. Yay, team, go. There's a lot of there were a lot of both people and processes that had to be satisfied before we started putting this into the hands of our customers. There are compliance issues. There are new protocols for agreement disclosure, notification, changes to be made to existing, usually online banking, notifications, settings, a whole host of technical issues having to do with funds availability and messaging and future-proofing as you solve problems at a small scale. You have to decide whether or not that solution is going to work at a larger scale, and if it doesn't, what's going to be next, and so on. So, from a project management standpoint, it was very much its own project that required a lot of people to be consulted to raise, I won't say objections, but requirements that needed to be met in a way that made sense before we went live.
Did you have to use external parties to help you manage those bodies of work, the project or the technology, or how did you?
No more so than we already normally do. We don't have an in-house legal department. We have a lot of resources that we tap regularly for the same kinds of questions as they come up in other areas. So I think what you might be getting at is, did we involve somebody like yourself, a third party, thing like that? And the jury is out as to whether or not, for better or for worse, we did not. But we find ourselves more and more valuing folks in your role and in our position as fellow travelers and sort of new in the space as valuable resources when it comes to finding out, oh, well, how did you solve this problem? Or who did you talk to about that? Or do you have somebody that can help me, set certain things up? And I will say now that we probably could have benefited from a little more guidance, but it didn't really exist when we were getting started. We were sort of plowing the new ground ourselves.
But I guess it's an advantage and a disadvantage to being one of the leaders in the industry is you get to encounter all the roadblocks. And now as more institutions have joined, there's a lot of best practices that others can take advantage of that, so thank you for sort of paving the way and sharing your insights too. So I'm sure the people listening to this, there's going to be a lot of people appreciating these insights. Were there any technical hurdles that that you want to share as you encountered this? Or
I've boiled it down after a lot of conversations with a lot of different people. There are four, and there always and forever will be four, and we'll go from one end to the other. There is the core piece of it, the core accounting piece of it for any financial institution is how does the instant payment, the faster payment, the request for payment get to your core from an accounting perspective, that last technical mile. There is access to the network. So that is something that we are able to have our own access to certain payment types, think wires and ACH, but we were unable, we don't have the resources in-house to do technically the access to the faster payment rails, which is one of the primary reasons that we went with a third party on that. Operational piece, number three, which is the combination of training and other resources to accommodate, the 24/7 stuff that I talked about a minute ago, and any kind of new accounting that is needed for instant payments. And last, and one of the more difficult ones that is still seemingly out there for people is on the other end of the payment. How do I get it into my customers' hands? Can I offer it through my online banking? We haven't been able to do that yet because, like many banks our size, we're sort of held captive by our current provider because we don't do it ourselves, and their ability to offer it. So we went on our own and developed an app that we can put into our customers' hands to initiate the payment. So those are the four big pieces that we had to solve for, and that I think after, like I said, a lot of discussion with a lot of people, seem to be universal pain points from a technical standpoint.
sounds like, and your app has got a really great user experience, and that's something that you're open to sharing with other financial institutions, I believe.
Absolutely.
This was really great foundation, and what we want to do is pivot and look a little bit forward. So can you help us, so now that you are on the network, you're seeing traction. So can you maybe quantify some of those results that you've seen since joining the network?
Yeah, absolutely. What we're seeing is a majority of traffic right now that is coming from other already established payment channels. These would mostly be the third-party apps that people are familiar with. And that in and of itself right there is what is the sort of biggest informer, at least for us, in terms of use case and ubiquity and justification and things like that. There are people have already decided not just P2P. There are bill pay things. Anything you would use one of those third-party apps for is a lot of the traffic, at least that we started to see initially. So that tells us right there that people want it and they're going to use it.
So have you seen I don't know, like any unexpected benefits from joining the network or participate that you didn't
What
expect?
we found is that once given the flexibility of being able to use a tool to initiate a payment that could or could not, depending on preference or setting or user decisioning, be a faster payment. Like once that flexibility is out there, it is amazing how organizations will come up with new ways to be flexible that we've never even thought of. We've seen our little app deployed in small towns where people were sick of various fees associated with other payment types. And so they started using it B2B, P2B, point of sale, that kind of a thing. And it really sort of only exists as a capability in a lab environment like that. But, our regular app transaction size is, under I think it was under $300, except for one community bank that deployed it in one town where the average transaction size is well over $2,000.
Oh,
So
wow.
yeah, they're using it to do all sorts of things because it was fast, it was easy, everybody had access to it, and it was very low cost. On the flip side, we're also seeing use cases that take away what were instant payment transactions in terms of cash, and making them cashless. Not necessarily because they were any faster, but simply because they required less overhead when it came to executing the transaction. People didn't have to walk around with cash, and this is things like restaurant groups tipping out their employees, which is a B2P, and it was a use case that we'd never even envisioned. So we're seeing a lot of people are very concerned about, oh, what's the use case that's going to drive this, or how do I justify it with this? And the answer is it's already out there, it's already being used. Your people will tell you once you start to offer it, is our experience.
Wow. I think that's amazing. And I love that use case around the tipping thing, like end of the day, here's your tips, just you've got it. And
I had a
that's
restaurant manager tell me that they're so happy they don't have to keep a ton of small bills and a bunch of cash, and they're not sending 20 employees out at night with $150 in their pocket at 2 a.m.
yeah.
and they're sending a text messages. People get to leave sooner, the money's right in their bank account. There's no worry about I didn't get what I was supposed to. It's all easily tracked and accounted for, and it's just it's something that no one had really thought about.
I think we need to do more broadcasting of that use case. I love that. Um, okay, so is there, okay, we talked a little bit about the use cases. Is there any one particular that you might say is like the most appealing use case out there? And then maybe also too, like, it sounds like you're already like driving new business from offering this. So I don't know if you want to elaborate, on those two elements.
We have found that from a more traditional use case standpoint, when speed is the issue, that's what an instant payment offers as a differentiator from other payment types. It is almost always some kind of a credit need. So just-in-time loan funding is one of the areas that we see as a big growth for this. And this could be anything from traditional car and house and real estate, things like that, to other smaller micro-lending situations. But that is that's what we see. Our customers are telling us is going to be the most used case.
Right. No, that makes sense. And I think I've heard from other financial institutions that auto lending is one of those areas that they've gotten some good traction on. So, so looking ahead, like what do you see are future opportunities for instant payments?
So, looking ahead, mostly I look forward to this is going to sound kind of silly, but to what I don't know yet. Because up till now, I've had customers tell me, "Oh, here's a great use for it that I couldn't have thought of in 10 years." So that is what I'm looking for. But a better answer to your question is going to be from a personal use standpoint. An instant payment makes the most sense as a replacement for or in addition to those kinds of payments that you want to be settled and over and done with, and not need any additional thought about or attendance to after you execute it. So a lot of casual use that right now is being done by third-party apps. If I can put the equivalent of that third-party app into people's hands, that stays bank to bank, doesn't go through any uninsured piece of the transaction path, that's where I'm going to see the adoption, and it's going to keep a higher. It's going to result in higher deposit amounts being kept inside my bank versus being dispersed across third-party holders of funds. And it's going to result in, more college students being able to get money over the weekend from parents quicker than having to wait until, the next ACH window or a check arrives or something like that.
That's another good scenario, good use case example. A lot of college students, a lot of parents out there with kids needing to get their funds and paying their bills or paying for food on the weekend or getting an apartment rent.
The thing about an instant payment is you can get into line at your big box retailer broke and have money in your account by the time you get up to the register.
Yeah. That was amazing. At the Smarter, Faster Payments conference, they gave an example of some mom with her like diapers and her baby formula because she just needed to get through a couple of hours until her next paycheck, and she was able to do kind of like a earned wage access advance to while in line. So you were talking about this, that's kind of like smaller scenarios. What about how do you anticipate like the broader adoption around like ISO 20022 and the rich messaging? Is that gonna, do you anticipate that impacting your payment strategy?
If, as the current trend continues, other payment types start converging to using that standard, yes, there's a lot out there because finally there will be a standard that everyone can adhere to that actually has some robust and expandable capacity, unlike some of the current standards. And so we won't end up we'll end up with a I got to be careful of the terms I used here, a more homogenized capability for development of different systems, because right now, one accounting system can't talk to another, but if they have a truly similar or common point of reference that they can use, they can both build off that while hopefully maintaining capability, and we don't run into, incompatibility, which is one of the current barriers. But it's also going to allow other transfer types that or payment types that require greater degrees of administrative overhead to be more self-contained. And I gotta think, and this is just me talking here, that there's a huge capability that is yet to be explored in transfer payments. That's why I said transfer a second ago. Either government to consumer or business to consumer in the insurance space that would be able to take advantage of these more robust and expandable information sets to do away with, one would hope, some of the administrative and bureaucratic overhead that exists right now, which cause things to be forced to be settled by check and more slowly
and check's a big exposure area now with so much with check fraud on the rise and
what's old is new again. Yeah.
All right, so just to wrap it up, what insights would you give to other financial institutions that are considering adopting instant payments?
The first is, if you're not going to connect and manage it yourself like you do other payment types. And of course, my perspective, I should back up. My perspective is community bank, not a big bank, not a regional, not a mid-size. But if you're like me, and you're not going to do it yourself, both the clearinghouse and the Federal Reserve have great resources for connecting you with different partners when it comes to solving that technical piece of access to the network. The second piece of advice would be to sit down, take a deep breath, and stop going absolutely insane over the worry of 24/7 and fraud and liquidity and all that stuff, because you realize that at no time has any bank ever declared it the Wild West, lawless, full-time, 100% funds availability for all at all times, and anybody can do anything. That's just not how banks work. And you can put sane guardrails in place and sane procedures, and you're already doing it in some manner or fashion 24/7 with other types today. So sit down, breathe, and move forward.
Yeah, that is amazing advice. Totally agree. I think there's a lot of spin happening, and instant payments is something that can be deployed relatively quick, but at your own level of comfort, your own risk appetite, with all the controls that you usually have in place. And I just realized, like, we didn't talk about this at the beginning, but
Request for pay and instant debit capability is sort of the tippy top of the mountain, at least at the moment. And we did go through the certification process. We are capable, but there is very little point to offering it at the moment until a greater number of other institutions get there as well.
Ryan, this has been an amazing conversation. Thank you so much for taking time out of your day to share your journey and your insights with us. And, we wish you the best of luck as you continue on your instant payments journey. And I'm sure we'll love to have you back as, your use cases evolve. Thank you again for your time. All right.
You're welcome, Marcia. Happy to do it.
All right. Bye.